Hi, my name is Marshall. I'm an investor-focused buyer's agent based in Melbourne. I've been doing this for about 5 years. We're actively buying across Victoria, Tasmania, regional New South Wales at the moment. And obviously there's a few things that have come to play, the budget being one thing, rising interest rates being another. And it has created an environment where we've definitely seen a reaction in the market. Just to sort of clarify, what maybe a month ago, 2 months ago, we were seeing most of the areas that we're buying in, everything was, all the offers were being placed above asking price. Now there is sort of a little bit of a opportunity to get a discount. Things have definitely cooled off. There's definitely a lot more hesitancy in the market. We're seeing that from investors. We're seeing that in regards to our conversations with real estate agents as well. But to be completely fair, we have always understood that property investing is a long-term game, and a lot of these changes, no negative gearing, increased capital gains tax, increased interest rates, etc., all of these changes sort of, I would call them short-term hiccups, and I don't think they're going to necessarily impact the growth of property over the longer term, especially in Australia as well, because, it's very easy to understand that the Australian government, they love property. They always want property to go up. Even these changes, or the 5% deposit scheme, everything that they've sort of introduced, I feel actually does the opposite to bringing prices down. 5% deposit scheme brought more buyers into the market. That forced prices up. Now they're also saying, obviously, that no capital gains, no negative gearing, and what we've seen is, for the investors who are still actively participating, who actively understand that this market is a really good time to buy, they are buying lower. They're definitely buying lower because they don't have the tax advantage of negative gearing anymore. And what we're actually seeing, funnily enough, well, not funny for first home buyers, but we're seeing those investors, they're actually coming in at a lower price point, and now they're actually starting to compete directly with home buyers. So a lot of investors are sort of pushing away those blue chip assets that negatively gear significantly, and they're going for entry points into the market, whether it's a townhouse, whether it's like a standalone dwelling in the regional market, or a cheaper outer rim suburb. A lot of these investors are going there. So again, the government plans and has the intention to bring prices down, but at the end of the day, investors will do what they have to do, and property is always going to be one of those things that goes up. And the sophisticated investors really understand the opportunity at the moment. So I guess my advice to people who are looking to get into the market, definitely buy lower. You have to change the way you approach it, because your holding costs will go up a little bit, not significantly in my opinion overall. As long as you're buying in an area with the right fundamentals and you're not just buying for rental return, you'll be okay. So if you're brave enough at the moment to enter the market, you'll be getting the best deal possible. And if you understand that property is a long-term game, which it is, you'll get in. And then when the sentiment returns, because this always happens. It's happened with COVID. It happened with this World War III oil price thing. When interest rates started to turn around, people paused. When the sentiment sort of deteriorates, people pull back. But then once there's a little bit of positivity, people come back to the market, and by that point, again, you're in there with the competition and whatnot. So just a bit of an update today about where the market's at. Still think strong projections moving forward. A little bit of the sentiment obviously is going to impact the speed at which the markets move for a little bit of time. But if you can get into the market now, it's an amazing opportunity. We're scoring really good deals at the moment, and our clients are very happy. So I hope that sort of helps give you some clarity on what's happening on the market, in the market, on the ground. And don't believe what the news says. Don't buy into the sentiment. If you really want to build long-term wealth with property, take the advantage of what's being presented here.